Ex-PM Datuk Seri Najib Razak was referred to as the mirror image of fugitive low-tech Joe in High Court today as the 1MDB Tanore trial kicked off. In his opening statement, public prosecutor Datuk Seri Gopal said that Najib and his alter ego Jolo produced sham letters and cheques to falsely represent 1MDB monies that had entered into his bank account as donations from an Arab prince. This as the former premier actively took steps to evade justice and cover up his criminal acts. Gopal said that the cheques from the purported Arab donors were never meant to be encashed and were never encashed. His opening statement also underlined that 1MDB funds worth over 2 billion ringgit were channeled through Tanore Finance Corp, an entity controlled by Jolo's associate Eric Tan, before eventually ending up in Najib's bank account. The funds were then used to pay entities and individuals for Najib's benefit. However, Najib's lawyer Tan Sri Muhammad Shafi Abdullah maintains that the ex-PM had been misled by Jolo on 1MDB's dealings. Najib is facing 4 counts of abuse of power and 21 counts of money laundering involving 2.28 billion ringgit. The trial today lasted 4 hours with 4 witnesses called and will resume tomorrow morning. Telekom Malaysia saw a 12% improvement in earnings for the second quarter of FY19 to 114.18 million as the telco kept a stronger hand on costs. This was evident as the stronger net profit came on the back of a 6% drop in revenue to 2.77 billion due to a decline in voice, internet and multimedia services, among others. Unify's top line for the quarter declined 10.7%, while TM1's revenue also dropped by 8.4%. However, the telco saw a reduction in operating costs from the continuing impact of the group's various cost initiatives. Half-year numbers were better, with net profit spiking 63% to 422.46 million, despite revenue decreasing 4% to 5.55 billion from 5.78 billion ringgit previously. In a statement, Group CEO Datuk Nur Kamarul Anwar Nuruddin said that while TM expects the second half of the year to be tough, it will continue to focus on improving customer experience and its cost optimization efforts. FGV Holdings slipped deeper into the red for the second quarter of FY19 as losses widened to 52.2 million from 23.43 million ringgit due to lower CPO prices and losses incurred in its sugar business. Revenue for the quarter dropped 4.6% to 3.28 billion ringgit. For the first half of FY19, FGV clocked a net loss of 55.57 million on the back of lower revenue of 6.56 billion ringgit. On FGV's prospects, Group CEO Datuk Haris Fadzila Hassan said the company expects CPO prices to pick up towards the end of the year due to the ongoing US-China trade war, higher demand from biofuel mandates, as well as the upcoming festive seasons. Overall, he called the results encouraging as FGV continues to turn itself around. As for its sugar segment, Fadzila said the business is under review as its current structure is suboptimal and doesn't consider policy shifts or trends. AirAsia Group saw its second quarter FY19 net profit plunge by 95% to 17.94 million ringgit from 361.8 million ringgit previously due to a mix of share of losses from AirAsia India, costs related to its digital ventures, maintenance expenses and a 10 million ringgit fine from a competition watchdog. However, revenue came in 19.7% higher to 3.14 billion ringgit as the low-cost carrier flew 18% more passengers year on year and ancillary revenue grew by 39% for the same period. AirAsia also increased its market share by 5 percentage points for both domestic to 62% and international to 50%. As for the first half of FY19, net profit likewise plummeted 92.7% to 110.2 million, while revenue grew by 16.2% to just over 6 billion ringgit. Going forward, AirAsia Group Chief Tan Sri Tony Fernandez said that having begun financial disclosure of its digital platforms in the first quarter of FY19, the group is excited to see developments rapidly taking shape as it moves towards becoming a travel and financial platform company. According to its boss announcement, AirAsia is expecting load factors to remain strong for the rest of the year as it continuously works on reducing its costs. The Cabinet has approved the implementation of the National Fiberization and Connectivity Plan at a cost of 21.6 billion ringgit. The NFCP will be implemented over the next 5 years up until 2023. Communications and Multimedia Minister Gobind Singh Deo said the NFCP will provide nationwide digital connectivity that is robust, pervasive, high quality and affordable for all. The NFCP's main targets include the provision of an average speed of 30 Mbps in 98% of all populated areas and gigabits availability in selected industrial areas by 2020 and all state capitals by 2023. The plan will be funded through the provision of the Universal Service Provision regulated by the Malaysian Communications and Multimedia Commission and commercially by the service provider. Gobind called the NFCP crucial infrastructure in helping to enhance Malaysia's competitiveness in this digital age and that it could eventually help to improve the living standard of the people.